if you go into solution space, what do we got? We got physical gold. We've got Bitcoin. Like, how do you think we should be addressing this as a species? Because obviously we're trapped. We've been in this problem pattern for over 500 years.
Yeah. And of course, the fact is also that the central planners are still aiming for further powers to be transferred to them.
Yes.
And for further increasing, their control and their centralization. Mm-hmm. Central bank digital currencies is a huge threat to mankind. We definitely have to oppose CBDCs, that's for sure. And it's necessary to oppose even digital ID because that's the intermediate step to get to CBDCs. But this is a controlled digital prison. We need to avoid that at all costs. So that's number one premise. And then how do we secure freedom and independence? Gold, I've been a fan of gold for a long time, and that continues. It seems that the schemes the central planners have been using to suppress artificially the gold price are beginning to peter out. They're in trouble. Lots of strange things happening in London with the gold market and gold derivatives. Bank of England can't deliver, all sorts of strange things. So, and of course, that's been a reason why the gold price has recently shot up again. It's still cheap. Gold is still undervalued. Think about the massive money creation we had since 2020. And gold has only doubled since, early 2020 or something. Come on.
Yeah.
It should be more like $10,000 per ounce, I would say, not just 3,000.
Yeah. But
anyway, that's one thing. Digital cryptocurrencies, Bitcoin in particular. I mean, Bitcoin is attractive as a concept. We have to just be cautious. I mean, I would say put money into Bitcoin, but be ready to cash in, for example, into gold. The moment it's surged, I think there'll be a huge surge in Bitcoin. And when it does the final run, I think it's going to have a massive run, but upwards. But after that, probably the incentives by the central bankers are such that they want to shut it down. And there will be a clampdown. They will try very hard to get all sorts of measures against it. And, when they create big crises, they can probably also, outlaw it. It's possible. And they can cause problems for it. And so I think one can play it, but one has to be ready to also cash out when we get the big run. I think it still has a good run ahead of it. Otherwise, real estate, if it's in the right country where we're not just still in the bubble phase. Germany is past the peak. It's going down, but still prices haven't actually reflected that. They will go down another 2-3 years, I think, significantly. And other markets, I mean, in the US, it'll be interesting. There's still the possibility that when there is a bigger financial crisis, and at the moment, I mean, this looks like, it could be the trigger. President Trump's trade policy is not entirely unreasonable, but it's a setup. The timing, to me, looks like a setup. The central planners pulling the plug. They already tightened credit a bit earlier, already last year and the year before in some countries. And they want a patsy, a scapegoat. And this is almost ideal.
So this will be
they will say, it's President Trump's trade policy. I mean, on tariffs, in principle, tariffs can be very helpful if they're used to then combine it with an industrial policy and develop your own industries, which are helped by the tariffs. We don't have that at the moment yet. I mean, we have the general idea that companies should sort of onshore again and have their factories in the US as opposed to in China. The question is whether that's going to be sufficient. There has to be sufficient policy to expand your production domestically in order to benefit best from tariffs. Otherwise, if you're just going to restrict international trade as a result, that's of course not good for anyone. But you know, President Trump has a point that the US has been essentially the most attractive market for everyone to export to, and all the other countries have been usually less open. I think on a country by country basis, there's a different story there, and some countries have been quite open. Japan also was still criticized, but actually that opened up after thanks to the Bank of Japan's 20-year recession. It's now very deregulated and is quite open, and the yen is quite cheap actually. So foreign companies do have a good chance now in Japan. I think that's not really justified to have tariffs there, but overall, when there is inequality in this trade relationship, yeah, I think it makes sense to tackle that. But the way it's done and the timing, unfortunately, could mean, I mean, to me, it looks like this is the setup for the really big blowout in the financial markets, which will be blamed on President Trump as the second Hoover, President Hoover, who did something similar in 31 and so on. And then the Great Depression came.
Right.
So there is potential
that's a
there.
bombshell to end on, the Great Depression 2.0. What's your time frame for that?
Well, the coming few years, really.
Yeah. Okay.
I mean, we had sort of 5 years in the US in the 1930s as this panned out. But as the central planners continued to take the wrong policies, and this is what will give us indication whether, I mean, the potential is definitely there for this to happen, sadly. And the risk is also fairly high, in my view, that this will happen. Whether it will actually happen will depend on the actual policies taken. Because even if you have the worst banking crisis in history, you still can have an immediate economic recovery if you take the right central bank policies. QE1, QE2 usually is the combination. So we need to watch this carefully. I will do this, and I will write my substacks on our Werner Substack following this up to see whether this is the big one or not. But at the moment, the potential is there.
Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.